So knowing when time to sell, that's another key component is your timing. So I always talk about, what makes a profitable trade. It comes down to direction, timing, and then managing your risk. So you want to have a really good kind of some tools that you can use to really gauge the market. When is best to sell or when is it best to buy? So we're going to look at a couple of tools that I use to do this. One is what I call my cycle reversal indicator, and the other one is an extreme range band indicator that I put together. And these two tools together are great for picking, when to sell calls or puts when things are starting to roll over or when a cycle is starting to shift down or up. So that's where you can really get the timing component down to give you that big edge. So here's a current example. This is a Netflix, and this was what I call a cycle high reversal trade. So on the weekly, Netflix was coming in. I'll show you where it is. It was coming into a 200, let's see, I think it was a 200-week moving average, and we were at what we call the average true range. So this blue line here is 3 ATR, 3 average true range from the mean. So the mean is right here, this yellow line, that's a 21 period moving average. So this is basically 2 average true range ATR, like standard deviations above. All right, so that's getting very extreme. So the white line is 2 ATR, the blue is 3. So when we get to 3 ATR on a daily or a weekly, that's getting really what we call stretched or extremely kind of overbought. So let's pull this up. I'll show you here, and this is what I call the extreme range band indicators, but it's great for indicating when it's a good time to sell. So if you look here, this is, let me put this on Netflix, 1 second here. So here's Netflix, okay? So see where it got up here. This was, let me put the weekly and you'll see it came up to key moving average, which gives you a potential area for it to fail out. So this is the 50 simple moving average. So this is a 50-week period moving average. So you can see how this is also 3 ATR on the weekly. So very, very overbought, very overstretched. So the indicator tool is great because it's kind of a forward-looking tool. So when we get up to the 3 ATR, like you see right here, and the lower study is my reversal indicator, and when the reversal indicator, which is white, crosses the moving average of that indicator, that generates this arrow, which is your sell signal, if you want to take it for timing and entry for selling a reversal, okay? So this is what we call a reversal. And this one is going from a bullish reversal to a negative downside reversal. So that arrow pops up at 3 ATR, high probability that security or stock is going to start getting exhausted. I call this buying exhaustion. So you get a lot of buyers that come in here. It's kind of like dominoes or kind of a musical chairs. Everybody's buying, selling to the next person. Party's great as long as somebody's buying it from them. But once you start running out of buyers, you get this thing exhausted, and that's where you can turn into that reversal. So it's a really great tool. You can see the last time this was on a daily, that was a great signal. And you can see the last time it was this extreme for Netflix. We have to go back quite a ways. Let's take a look here. The last time it was 3 ATR was right about here. This was back in August. Let me blow this up a little bit more. So right about here. And again, look at this signal. All right, so we had two. You get a reversal here, reversal. So typically you could get 1 to 2 to 3, but look here. So here's your 3 ATR. You get the reversal here. Does it go any higher? No, it starts going sideways, so it can go sideways, and then you finally get the buying exhaustion kicking in, and then it starts to come off. Okay. So that's a really good, that was a good one on Netflix, and we actually did set up a credit spread on this. So the tool's great because what you can do when you get this kind of reversal signal, then what I like to do is you look to sell your out of the money standard deviation type setup. So you go out here when you get this reversal signal, high probability that the market's going to stall. So you go out and you sell a 20 or 30 delta. out of the money. So it gives you that probability trade, and you're just waiting for this thing. It could turn sideways for a while and then turn down, but it gives you a great timing edge and entry. So you don't have to be as concerned if you're just, nakedly set, like, let's say you're, right here, you just, naked sell a call or put here, you don't really have that great edge. So that's what I like about it, that edge that gives you for, selling and constructing these types of spreads. So that's one example. That's Netflix, cycle high retracement. Here's one on Apple, and this just happened as well. This was on the 1st of November right here. You see the reversal came, and Apple started to stall. Now this is on a daily time frame here. So this is only 2 ATR. So Apple has a reversal there, reverse there, came off. So I'll pull up some other ones. You can see Apple on past ones as well. So it's just one of my favorite tools that we use, this along with momentum, to give us this kind of timing edge when things are going to either turn over or turn up. So we use it both ways. So if we look at Apple here, you can see here last time we had up to 3 ATRs right about here. This was back in August. You see how it got up to the 3 ATR reversal signal right there, came back down. So this thing works just, really, really, really well.